Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about AT&T INC quarterly report. AT&T Inc. offers a wide range of telecommunications and technology services worldwide through two main segments, communications and Latin America. The company's list of businesses and services includes wireless voice and data communications, handset sales, wireless data cards, and devices broadband services, including fiber connections, legacy telephony voice communication, services, VoIP services and equipment, customer premises, equipment for multinational corporations, small and mid-sized businesses, governmental, and wholesale customers, virtual private networks, VPN, wholesale and outsourcing services, hosted and managed professional services, AT&T dedicated internet and fiber Ethernet, fixed wireless services, postpaid and prepaid wireless services in Mexico under the AT&T and iPhone brand name, smartphone sales through its stores, agents and third-party retail stores. AT&T Inc.'s stock price surge. A year of growth and optimism in the past year, AT&T Inc.'s stock price has seen a remarkable increase of 17.97%, driven by a combination of strategic business initiatives, strong financial performance, and positive market sentiment. Several key factors have contributed to this growth, including robust fiber broadband expansion, strategic investments and acquisitions, and technological advancements. The company's aggressive network expansion and strategic acquisitions have bolstered its communications infrastructure, while its IoT capabilities have been enhanced through new ESIM solutions. AT&T has also reported strong financial performance, generating substantial free cash flow and providing robust dividend coverage. Positive analyst upgrades and price target revisions from investment firms such as Goldman Sachs and Bank of America have further boosted investor confidence. The company's focus on technological advancements, including the deployment of artificial intelligence, AI, and machine learning capabilities, has improved network services and enhanced customer experience. As a result, AT&T's stock has outperformed the wireless national industry's growth and in some periods, the S&P 500 during the past year. With its strong financial performance, strategic initiatives, and technological advancements, it is clear that AT&T Inc.'s stock price surge is here to stay. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth is primarily driven by service revenue, which includes wireless service revenue up 3% from the prior year, internet and video revenue up 7%, and mobility segment revenue growth of 1.7% Q3 and 3% $9 million. Additionally, equipment revenue growth contributed to overall revenue increase, with wireless equipment sales up 6.1% Q3 and 10.4% $9 million. On the other hand, revenue decline is primarily attributed to business wireline segment revenue decline of -7.8% Q3 and -8.7% $9 million due to lower demand for legacy services. Legacy and other transitional services also experienced a significant decline of -17.3%. Net income and profit margins experienced significant growth. The company's net income has undergone a remarkable transformation, with a staggering 65.32% increase in the third quarter of 2025 compared to the same period in 2024. This growth is even more impressive when considering the year-to-date YTD figures, which show a 146% rise. The net income for Q3 2025 reached $9,677 million, while YTD 2025 saw a significant increase to $19,230 million. Profit margins have also seen substantial improvements, with operating income margin rising from 7% in 2024 to 20% in Q3 2025, and remaining at 20% for the entire YTD period. Net income margin has also experienced a notable increase, jumping from 0.2% in 2024 to 31.6% in Q3 2025. The primary drivers behind these changes are attributed to two key factors: a decrease in pension and post-retirement benefit expense and an increase in other net adjustments. These shifts have contributed significantly to the company's improved financial performance, resulting in higher net income and profit margins. The company's financial performance indicates a positive trend in its operating cash flow. The data shows that the net cash provided by operating activities has increased from $26,875 million in 2024 to $28,964 million in 2025. This significant increase suggests that the company is generating sufficient cash from its core operations to meet its financial obligations and invest in growth initiatives. The company's debt level has undergone significant changes over the past year. Total debt increased from $123,532 to $139,468, a rise of 13%. Long-term debt also saw an increase of 8%, from $118,443 million to $128,090 million. However, the most notable change is in short-term debt, which surged by 122% from $5,089 million to $11,378 million. On the other hand, interest expenses have shown mixed results. While they decreased slightly in both the 3 months and 9 months periods, there was a slight increase of 1.5% in the third quarter of 2025 compared to 2024. Conversely, interest expenses dropped by 1.7% for the first 9 months of 2025 compared to 2024. Overall, the company's debt level has increased significantly, with short-term debt being a major contributor to this growth. However, interest expenses have shown some fluctuations, but remain relatively stable overall. The company's financial performance reveals a mixed picture across its segments and regions. On the positive side, Latin America performed well in Mexico, while the communications segment showed growth in various areas. The mobility segment saw an increase in postpaid subscribers and service revenue, with consumer wireline experiencing significant revenue and operating income growth. However, other segments struggled. The corporate segment suffered a decline in operating revenues, while business wireline experienced a revenue drop and negative operating margin. The certain significant items segment reported substantial losses, despite a significant increase in segment operating income. Prepaid subscribers in the mobility segment also decreased, indicating some areas of concern within this segment. Management is projecting a mixed outlook for the company. In the short term, they expect revenue declines to continue in legacy services, but anticipate improvements in operations and support expenses through transformation activities. They also plan to invest in strategic initiatives such as fiber expansion, which is expected to drive growth in fiber broadband customers and revenues. In the midterm, management expects significant progress on pending acquisitions, including the Lumen deal and EchoStar transaction, which will expand their 5G network. They also anticipate recognizing a substantial portion of remaining performance obligations by the end of 2026. Looking ahead to the long term, management is shifting focus towards wireless and fiber services, away from legacy voice and data services. This strategic shift is expected to drive growth in subscribers and service revenue, with favorable foreign exchange impacts and higher equipment sales also contributing to growth. The company's financial activities involve both acquisitions and divestitures. Key acquisitions included the issuance of non-convertible cumulative preferred interests in Telco LLC for $2,250 and a structured sale-leaseback of real estate, generating approximately $850 upfront cash proceeds. On the other hand, significant divestitures were made through the sale of interest in DIRECTV to TPG Capital for $4,100. Additionally, the company redeemed all outstanding Series B preferred stock for $2,075. The company has a history of rewarding its shareholders through both dividend payments and share buybacks. In recent years, the company has paid out significant dividends, with amounts totaling $6,168 million in 2025 and $6,171 million in 2024. Additionally, the company has also invested in buying back shares, spending approximately $2,444 million to repurchase around 87 million shares. Concerns about inventory buildup and supply chain disruption exist. The company's financial summary highlights 2 pressing issues that warrant attention. Firstly, advanced cash payments for wholesale access may indicate potential inventory buildup, which could lead to unnecessary costs and inefficiencies. Secondly, disruptions in the supply chain have been reported, making it difficult for the company to acquire necessary goods and services in a timely and cost-effective manner. These concerns are further underscored by the decline in direct supplier financing, which has reduced cash from operating activities and indicates reduced supply chain activity. The inability to obtain handsets, equipment/software, or have them serviced in a timely and cost-effective manner from suppliers is a significant concern that requires immediate attention. And that concludes the financial summary for AT&T INC. Feel free to comment below, and I will be happy to answer them when possible.